Monday. What's up, everybody? It's Monday. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a phenomenal week. Took a week down last week. Was a little bit out of sorts. Had a little bit. I was on injured reserve, as they say. But decided that it's time to come back into the saddle, get rocking, get rolling, and I'm glad to be here. Do me a favor, if you're new to the channel, click the subscribe button, hit the notification bell. If you're a regular viewer, hit the thumbs up button. The like means a lot. And also, share this video out with others. Show them what we do here every day. Let's build the channel, and let's get rolling. So without further ado, let's talk about our big picture. So taking a look at the big picture today, we see that on a Monday morning, the S&P is up 1.752%. We are up running this morning to a brand new all-time high. We put in a brand new all-time high last night, right at the basically just at the open. A little bit of a tweezer top there on that all-time high, and a pullback in the overnight sessions. But we've just kind of continued to run higher over the course of the last couple of days. Tuesday, Wednesday, and Thursday were fairly sideways, but then Monday was down a bit. Tuesday, Wednesday, Thursday a bit sideways, but then Friday and into Sunday, kapowie, we are really rallying to the upside. So when we're rallying this hard to the upside, remember that our breakout above the all-time high does always exist, provided that I get some basing inside that region. If I move down to, say, the 15-minute chart, and I look in here, there is a little bit of noise right here. We'll call this, as Will Smith would have said in the Men in Black, noisy cricket, right? It's a noisy cricket. It's a little bitty wick over wick above a pivot low, where we could realistically see a decent reversal. Now, is there money to be made on the short-term day trade side from a breakdown below 42.22 down to 42.11? Sure. I mean, if you can get 5 points on the S&P, that's actually not going to be a bad day. So, there's points to be had there in the S&P. If that's something that you are interested in, take a look at those levels and see if that's a level that you might want to hop along in that area. Next, let's go take a look at the NASDAQ. So the NASDAQ, we had a rally up on Friday. Now the NASDAQ is not at an all-time high. I repeat, is not. So when I look at the NASDAQ, we're still below our all-time high as the market actually put in a bit of a double topping pattern. Right now, whenever we see this kind of a double topping pattern, which would be an M for murder, we would look for a measured move from the top to the bottom of the M, and then if I move this down from the bottom to here, that would be our measured move. That's where we would anticipate that double bottom would trade to. And oh my goodness, look at that. Look at that. Amazing, isn't it? It's almost like technical analysis has some credence. But that's what happened. We put in a little bit of a double top on the daily chart. We pulled back pretty hard, and now we're starting to rally a bit back up. I will say this. On the hourly chart on Friday, we put in a new swing high here. We were able to make it through this area of supply here. And so we had a confirmation demand area. Now we're basing inside that level now. So if you took that trade, you are 1, 2, 3, 4, 5 candles deep. Close it out. It actually looks more like a breakdown, right? It looks more like a potential breakdown for today than anything else. So we've got some disagreement in our markets, and that's safe to say, right? Safe to say that there's some strong disagreement in our markets from a directional standpoint. On our 4-hour chart, which is our major trend direction, we are technically in an uptrend. I have a higher swing high and a higher swing low. I was unable to put in a lower low on this last move down. And so while there's a decent area of supply right here, I'm gonna make it as a confirmation entry, because if the market starts rocketing up and our S&P bases here and we get a pop up higher above here on the S&P, well then I think that's obviously going to pull the NASDAQ higher, right? But if the S&P comes up to this high and does some basing and then falls, well, the NASDAQ might reverse in this level here. So we have two different stories at play from two different markets that could both turn out to be pretty effective trades, which is why we don't do set it and forget it, right? Let's let the market tell us what to do when price gets to that area. Next, crude oil. So looking at crude oil, we had a nice little supply level, which met entry and got a little bit of a move away. And so that old supply acts as new demand, old resistance acts as new support. We all know the proverbial mantra. And so now that kind of puts me between areas of demand and areas of supply where I would have to see some really decent levels formed. And I will just tell you, as it stands right now, I just don't have a whole lot of them. There's nothing that's jumping out at me that says, ooh, go long here. Ooh, go short here. And maybe you're seeing them, but I'm not. The best one that I see, which is kind of hidden, is another little, we'll call it a noisy cricket. I don't know where that came from. I literally just thought of that today, but I might keep using it. Wick over wick levels on a 15-minute chart are officially now known as the noisy cricket. So 66.02 by 66.12. Let's look up there for a potential reversal today. And then gold. So let's talking about gold. We had a breakout long in gold. So hopefully some of you were able to partake in the breakout to the upside in gold. And we've been talking about gold having a big move up since these couple of weeks of consolidation. And so we're really starting to see that come to fruition. I hope you guys have been listening and paying attention. We talked about gold as more of a longer-term play with the double bottom that we put in gold. And then once it hit the target on the double bottom, we got a little bit of a pullback, and now we started to rally a bit higher. I think from a fundamental standpoint, especially with the weakness in the U.S. dollar, that we can see gold 2,000 by the end of the summer. I think that's a strong possibility. We can see a 2,000 gold again by the end of the summer. Not for certain. I don't think that we're going to get another parabolic move like we had last year in gold, but I think that we will see a slow crawl up to eventually around 2,000, and so do with that as you will. On the hourly chart, we've got a demand level down here, a supply level up here, and a lot of sideways in between, and that's all I'm going to leave it as. There's nothing else to really add to this position at the moment, and both of those are confirmation entries, frankly. Especially the supply is definitely confirmation. You could theoretically take a breakout above here, provided we get a bit more basing. If you wanted to go with a breakout to the upside, I'm okay with that. Once again, we would need a third touch and a bit more basing for that to really make sense. But none of the demand levels from a reversal standpoint are going to be worth me taking. All right, so those are our big picture markets. Just make sure that you are remaining cautious and following your plan as you identify these opportunities. Next, let's go ahead and shift gears, and we're going to talk about our stock of the day. So our stock of the day is going to be Citigroup. So let's talk a little bit about Citigroup. Now, first of all, I still hold a grudge against Citigroup because they were Citibank when I was in college, and they were the ones that got me to open my first credit card, and they taught me how to be irresponsible. I'm just kidding. Not their fault. No, but Citigroup, if you look at Citigroup, it's had a really nice run up from as low of 38 around this time last year. Now we're sitting at 75. Really strong move higher. And it's been kind of in a sideways pattern here for a while. Little bit of basing, setting up for what could be a high base breakout. Now, when I go back and look at this on like a 3-year weekly chart, we can see that we do have some resistance that we're going to come up against here soon. And this resistance is a little bit of a supply area, but we're kind of basing in front of the supply, right? Making the supply that much weaker. And so that supply even in itself was not the fresh origin of the move. It's a retest of this area over here to the left. So while I do have some strong supply, I don't feel like that's going to be potentially enough to slow us down. And if we break above there, right, I go back and look at a 5-year weekly chart, and you can see that that's kind of an area that we've hit a couple of times. And so as we look to get above these numbers, where is the ceiling for Citigroup? Well, if I go back even further, let's go to a 10-year weekly chart. Right? Go back to a 10-year weekly chart. Now you'd say, wow, well, we're at an all-time high with Citigroup, right? This thing's got plenty of room. Once you get above an all-time high, you got plenty of room to run. There's no historical precedent for the stock being that high. And I say, au contraire, mon frère. The thing about Citigroup that a lot of people tend to forget is that Citigroup is a cautionary tale. I use Citigroup as a cautionary tale to remind people that just because it's a big company, just because it's a good stock, doesn't mean it'll always come back. And so Citigroup was the one that just got absolutely trashed was one of them that got absolutely trashed in the credit bubble of 2008. And so that saw Citigroup fall from what at the time was $57 down to 97 cents. And then they did a 10-for-1 reverse split, and that's what brought the stock price back up. Now, my point being is that if we go back far enough in time, we can really see that this was the whole reason why these two tops existed was this area of supply over here to the left on this weekly chart. So I think that our next area that price has a decent area of supply and for trading up to, in my mind, comes into play way the heck up here at around $120 a share. Now, I'm not saying we're going to make it to $120 a share, but when we're sitting here at 75, is it possible to make it up there based upon historically where it's been? Absolutely. And the good news is that this to me comes out more like a position trade, a longer-term investment opportunity. With money being as freely accessible as it is, people utilizing loans and banking, does this become a breakout play that can get up to 120? I think that it can. The good news is that you can place your stop very, very tight, and I can have a pretty tight stop. When I'm looking at this, and even just go below 68, right? A stop below 68. Now I've got $120, $122 price target. Call it $120 price target with a 68 as a backstop. So you're looking at about $8 worth of risk for what I think can be a pretty large reward. Now, certainly we're going to take our profits at a 2-to-1 reward to risk, but this can be a very, very effective way to trade Citigroup with what I think is minimal exposure. Now, how do I trade it? Well, a couple of ways. First of all, you could just buy the stock at $75 a share. It's not too expensive of a stock. If you don't want to buy the stock, you can go in and take a look at the option, right? When we're looking at the options that are available for Citigroup, we see that in June we have these are 39-day options. So I want to go out actually a little further than that. Let's go out to the September options, 130 days out. So when I'm looking 130 days out in those September options, I can pick up the at the money $75 option for $5.15 a share, and with a delta of 52. I actually, those of you that like deep in the money deltas, you can go into the $70. If you like a little bit out of the money, you can go to the $77.50. I will tell you, I prefer a little bit out of the money. It sometimes is going to give me a higher gamma. And so by going one strike out of the money, my theta is, people say, oh, well, theta, you get hurt more with time decay when you go out of the money. Not really, right? I mean, it goes from 1 cent to 2 cents. So my time decay doesn't really matter all that much, and I get the highest gamma at around this 45 delta. So it might make sense to take a look at this $4 option for a long call as an opportunity. Now, if you don't want to do the long call, then do the vertical spread. And so all of these options are available for you to take a look at as far as potential trade ideas. But I think that Citigroup does make sense as a good one to go for a longer-term play. So with that being said, everybody, I'm going to turn this thing off. I'm going to let you go. Hope you guys all have an amazing day. And until tomorrow, everybody, have a great day. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.